talk about. We are going to talk about how to find a low. What are some things you need to find a low or a bottom? It's not this. You need the too many longs, which is represented by this green, to turn to too many shorts. And so if I play this, fast forward it, you start to get it right there when this red jumped out. If I fast forward it more, you could see what we call our laser. That's this green or red line, turn red. All right. And so you get all this red, which is what you need. It shows shorts and maybe too many shorts. Too many shorts could definitely equals too many buyers, and too many buyers is what you need for price to go up. Another interesting thing happened down here on the lows of this particular session, which were around 80 in the S&P, was look at all these hollow green bars. That represents, because it's green, it represents longs puking. You guys know the word puke comes from slang for exiting a position. Exiting, in this case, a long position. If indeed you have longs that puke, we'll represent that with LP. That means that there's less longs, right? If longs puke, there's less of them. They exited. If longs equal sellers and there's less longs, that equals less sellers, right? You could reduce it to that. It should make sense. So longs puking, which we had a decent amount of them in there, mean that the upside could be even more probable, because less longs mean what? Less selling. You need less selling for the price of anything to go up. So we just kind of filled out the equation. Too many shorts equal too many buyers. Too many buyers is kind of what you want for the price of anything to go up. Too many buyers. So you have too many buyers and less sellers. I don't know about you. That's not important for the price of anything to go up. That's necessary for the price of anything to go up. And now this becomes a lot less random than without this tool, without this information. So many people do not understand why price moves. They have no business predicting it. It's got to come back down to reading order flow by the intent of the order, if you know it. The intent of an order is, can you find out if it's exiting a position or entering a new one? And what does that mean? And people don't even get to that point. They don't even get to the point, well, if I were to give some people all this information of all the longs and shorts in the market around the world, they wouldn't know what to do with it. Most people. They don't even realize what the edge is. Good luck finding it. And that's one of the big problems on the struggle, the high struggle rate in trading futures, is people never gave themselves a chance, let alone a good chance, to do it. And they go down rabbit hole after rabbit hole after rabbit hole after rabbit hole. But it comes down to picking a low without some magical Fibonacci line that happened to be there. Oh, look, it was a 50% retracement. It was a 618 retracement. It crossed with a moving average cross with a Bollinger Band. Do you think Fibonacci lines would be popular if the guy's last name was Johnson or Sullivan? Do you think Bollinger Bands would be popular if his last name was Smith? Understand the why, and you got a chance for the win.